Today, folks, amidst what has been quite a successful earnings season, the markets continue to tank. The S&P 500 now giving up pretty much half of its gains since the beginning of the year. We were up over 10%. Now the S&P is up only 5%. We're going to be taking a look at the broader stocks that fascinate me as I've been stacking a lot of cash that I'm looking to invest. We're going to talk about where I'm putting this cash, baby. We're going to talk about Meet Kevin, fear-mongering. We're going to talk about Boston Dynamics and these weird robotics that continue to surface and what's going to be a very fascinating future. And then, of course, we're going to be talking about so much more in between here. So if that is a conversation you'd appreciate, damn it, on your path to financial independence, and perhaps one day retire early, hit that like button and subscribe to join me on my journey as well. But taking a look, it has been fairly good from an earnings standpoint. And I mentioned that if we are in overbought territory, it's very likely that we're going to head into a correctional period because even though earnings can be good, we've gone up for way too long, way too fast. So we've seen the banks post fairly good numbers. Johnson & Johnson post really good numbers, but now we're into the chip sector, the hype cycle, and the chips really dictate what happens to a lot of the tech companies, and we're seeing the tech companies get hit. So let's talk about why. Because ASML, if you don't know this company, they make lithography machines, and in a very simple, complicated way of explaining it, they shoot a tiny ball of tin into the air, and they laser it and explode it into plasma light, at which that plasma light gets narrowed down to the thousandth the width of a human hair, and they etch little, basically, transistors into silicon chips that eventually get sold to Taiwan Semiconductors and, NVIDIA, that get turned into other forms of chips, and they get redone into other things. It's really cool. It's fascinating stuff. It's more advanced than what they put on the damn space station. But hey, it's a very fickle industry because it has ebb and flow. I mean, we're not talking about a company that sells the chips. They sell the machines that make the chips. And essentially, we're getting headlines like this. ASML orders dive as the chip maker pauses high-end gear purchases. What does this mean? Well, honestly, I don't think it's that big of a deal because it hasn't really changed from their outlook, and they haven't even changed their outlook for the rest of the year. The CEO said our outlook for the full year 2024 is unchanged, with the second half of the year expected to be stronger than the first half because the first half looks abysmal. You can see net sales went from 6.7 billion to 5.2, net income from almost 2 billion down to 1.2. But again, it's ebb and flow. There's periods where it's busier and not busier. So if they continue to meet guidance and you take a look at the overall year for them, they're on this trajectory that continues to remain strong, showing that the semiconductor space is strong. However, even Taiwan Semiconductors, the kingpin of all of it, like the powerhouse that basically enables NVIDIA and all these companies, they're down about 11% now. And there's a lot of headlines coming out like this. Taiwan Semiconductors returns to growth with a Q1 beat, but gives a cautious view. So the big problem right now is we thought there'd be a more return to normality in auto sales, in iPhone sales, in PC and gaming. But the fact is I think the end consumer, me or you, people that just aren't loaded with all this money, they don't have the same kind of cash to keep flipping iPhones every single year. So, TSMC made a note saying, hey, we thought there'd be a bit more of a stronger recovery in these sectors, but there's not. It's kind of a slower recovery. So, I mean, they're basically saying it's cloud computing, it's business to business like sales, and obviously AI and stuff that's been really driving the growth for them, and driving the growth it has. I mean, their last month, March, on their month over month revenue was up 34%. Like, we're starting to see high double digits come back here, baby. Net revenue was about $18 billion, $18.8 billion for the quarter. That's about 592 on the Taiwanese dollars, which again, is up pretty nice from the first quarter. I mean, it's up about 20%, 20%. And same with their diluted, like their earnings, net income came in at a fairly healthy level over last year. So Taiwan Semiconductors is doing quite good. But again, all this guidance is really telling people that, hey, there's some issues in the market. This is going to hinder companies like Tesla. This is going to hinder companies like Apple, right? That's what we're really seeing. And what I find really fascinating about these companies, because I've been looking at Tesla, there's a lot of complaints about Tesla being one of these companies that has less institutional ownership. And that's a big concern, right? Honestly, I don't think it is. I kind of like seeing these companies with lower institutional ownership. Tesla's sitting at about 45%. Because the thing is that means that there's more room for institutions to grow the company if we go back into a bull market where these companies start doing better than they are today. When I was looking at Apple, I was shocked to find out that Apple's current insider or corporate ownership, basically institutional, is only 56%. I mean, that's really only 11-12% higher than, Tesla, which is fascinating to me because I really thought it would be higher. I mean, when you compare it to companies like Google with the L, and you take a look at the statistics here, I'm always fascinated that, Google has an 80%? It's insane. It's 80.5% institutional ownership. I mean, let's compare it to a company like Amazon. Amazon, statistically here has institutional ownership. Let me just take a quick peek here of 62.8%. What about Microsoft? Like, I'm always fascinated to see the indifference in institutional ownership, because Apple to me is still one of the most stable companies on the planet. Yeah, the growth might be slowing down. I mean, Amazon's at 73.8 institutional ownership. Is crazy. So I'm looking at it as like, hey, like Apple is becoming largely unfavorable right now, and I'm finding it a fascinating stock to follow because it continues to go down on this chip news. And honestly, I think Apple's going to continue to go through this slump, but eventually they're going to start picking back up. We've talked about the statistics on Apple. We talked about how they haven't reached parity with the market yet. We've talked about how over Android is continuing to take market share, not only in the US, but globally. Like, I think Apple just is a superior product, and I think it continues to grow. And I think it's going to continue to. It's just the fact that we're in a terrible environment where interest rates are killing the average person. So until we get through the interest rate cut cycle, the auto market, all these markets are going to continue to struggle to some extent, which is going to open up some buying opportunity, which is why I've been looking at my portfolio. Stacked up about 4,000 in cash. I'm still going to get some refunds, another couple of G's from the government. The government give me some G's back, though I feel like I just gave them an interest-free loan, because that's really what a tax return is at the end of the day. If you have money owing from the government, I hate that. I should go tell my boss, hey, I'm overpaying. I'm being overpaid to government here. You got to give me some money back. It's like an extra 180 a month or 160 or whatever I could be putting in the market. But we're taking a look at my portfolio, and I'm very intrigued by the Canadian markets right now. I got VDY, starter position, really small, $1,200. I'm down about 4 percentage points on this. I'm looking to pick up some more VDY very shortly here. I'm not going to wait. I'm a cost averager. And I've been bearish on the market for a long time as of recent. You know, a lot of people have been complaining to me because I've been saying we're overbought here. You know, PEs are gone up too much. We need to go into a correction. That's why it's nice that I'm able to throw $4,000 in the account. I'm going to have a couple more coming my way here soon, but I'm going to be more fixated, to be honest, as a younger person that's not looking to retire yet, on the growth side of the portfolio, because I believe in the next 1 to 3 years, we're going to see a continued growth cycle in technologies. If VOO drops over 10%, as mentioned, anytime the S&P drops 10%, I'm going to double up how many shares that I'm buying. And I'm still up 3% on the position with Google crushing in this account. I'm not looking to buy Google as much here. We'll see what it does. I'm very happy with the starter position that I have nonetheless. It'd be nice to get another few $1,000 in there, but I'm going to be more fixated on Tesla. I'm just waiting for Tesla earnings to come out. Maybe the stock gets hindered even farther. At least that's what I'm hoping. It's my worst hit position, down 22%. Largely anticipated that was going to happen. I put about $8,600 in, knowing that I'm going to scale this probably to about a $15,000, $20,000 position, meaning we're going to double up the position from where it sits today. And I really want to cost average as it keeps dropping aggressively. I think the coming quarters is going to be abysmal, but we're going to come out of this on the other side, perhaps in a year or two, where we're going to start getting back into recovery mode. I'm not trying to time the bottoms by any metric, but I feel like people are missing the broader story of robotics. And with Boston Dynamics continuing to add hype here, I think is only going to be beneficial to the broader market, as much as people like to crap on Tesla and its robotics and where it sits today. This robot is a huge upgrade from the other Boston Dynamics robot some of you may have seen. Very creepy, very weird stuff. I think the cool thing is it's just proving out that from, you know, robotics body and just, you know, moving functionality, we're very on point with how humans operate, if not so even getting better, even with Tesla's hands, like how, you know, they want to be able to, I want to see them threading a needle and stuff like that. From there, it doesn't really matter. Like, the robots are good enough. We just need software. And I don't think Boston Dynamics actually has the money or the capital to invest into these huge supercomputers like Tesla having one of the most advanced on the planet. So I feel that's where Boston Dynamics is going to falter a bit, because their robots are more pre-programmed, human controlled. They're not going to have that AI or the AGI that's going to be controlling a lot of it, like Tesla's probably going to start implementing. But I think these robots are going to become very hyped, and then we're going to see a cycle around this in the market in the coming year or two, maybe even 3. But again, I'm investing in it for that reason, because I think Tesla It's just one of the most pronounced, easy ways to get exposure to it. Tesla, very overvalued company, so we need to see a correction period happening before we get into the next bull cycle with it. But in this bull cycle we don't have right now, we're getting a lot of fear mongering, and I hate this, even though I'm part of the fear mongering, but I've touted over and over and over again, guys, that no matter how bearish I am on the market, I am always buying stocks. Whereas these rich people come on that are very disconnected from the average person saying, I'm sincerely fearful the entire stock market is about to take a giant crap. I've been raising cash and complaining since March, but I think the real pain is about to hit. I pray I'm wrong. I mean, he's probably one of the most negative people because he's the clown of the internet. So am I. And as a clown, I can recognize I'm here to make money on the internet. And what makes money? Views, baby. We need more views. Negativity generates views. You can see as soon as a topic that he talks about gets a lot of views, he'll just hammer it until it stops getting views. And same with how he invests. I mean, this guy has underperformed the market so dramatically, and now he's been pumping day trading. day trading of all things. It's like this guy, I love that the comments here really kind of help represent this. Is like, if you're raising cash, why would you pray you're wrong? Do you buy stocks and pray they go down? The joblessness and recession that hits would be way worse. It's going to be way worse, guys, because I can predict the future. I can predict a multi-trillion-dollar economy and what it's going to do. And I'm scared and I'm rich, so I'm going to stack cash, baby. That's what we do here. If you just read through some of these, I honestly find them hilarious. They have an inverse ETF for this moment. You floated the same crap since 2022. Then you spent the remainder of the year flip-flopping and losing money. You need to go back and sell homes and ripping people off and promoting sketchy crypto exchanges. You know, people have also been making fun of him for his ETF in here. Like your ETF has been pooped for a while now. Thanks, Tesla. Like, he's blaming Tesla for his ETF being crap. He takes a massive management fee. He invests in very volatile, highly concentrated companies, and it's causing anyone that's bought into him to lose money, which he's done consistently for a long time now. And I just think the guy's funny. I like crapping on him because I just think this is bad rhetoric. You'd really need to preface this and add a lot of context to it, because if you're dumb and don't have context, you're going to start sacking cash, even though now is probably a profound time to start buying stocks, which I'm still doing. Still buying stocks all the time. If they drop pretty heavily, I'm going to be buying a lot more. Hell, you go back to the major dip of 2022 when Kevin was bearish as hell. All the media was so bearish, and it was the bottom of the market. October, the market tanked, and there was so much bearish. I remember my mother was hitting her retirement. They got a big settlement amount of cash. They're like, what do we do? I'm scared. I'm like, don't be scared. Now is the time to go aggressive. And what do? They went aggressive, and now their accounts are up massively. I was just talking to my mom yesterday. We were reviewing their portfolio, and they had some money to invest, and she was even just saying like, oh, our accounts are down. I'm seeing the numbers drop. But then we broad viewed the whole portfolio. She's still up massively. Her yields on cost are insane from those October lows. And we just started to buy more stocks because the market's a bit more suppressed, right? So that is what you really have to do, right? When people are fearful, be greedy. It's just common sense. Inverse ETF this shit. Make a lot of money. That's how it's always worked. Because if you are a true bullish investor and you play the long game like I always have, over a 10, 20-year period, does it matter? 2008, did it matter? Dot-com bubble, did it matter? 9/11, did it matter? The interest rate inflation of the 1980s and 90s, did it matter? Hell no, none of it mattered. So all of us is Fugazi. It's just short-term bullshit to make money, because that's what we do for a living. So keep that in mind. And I'd love to know what you're buying and what you think in that comment section below.